It is 2025, and there are a lot of changes for California homebuyers to be aware of. New conforming loan limits, new and confusing rules about working with an agent, and new state regulations that will affect your ability to get homeowners insurance. In this video, I'm covering everything you need to watch out for if you're planning to buy a home in California in 2025. And this isn't just for first-time homebuyers. Whether you're new to the housing market or not, this is the video that will prepare you for the California housing market in 2025. So let's get right into it. I'm John Schwartz, California's 1% homebuyer agent, and I represent homebuyers throughout the state, helping you win the home you want while paying less to get it. It's ridiculous to pay your agent 2.5% when tools like Redfin and Zillow exist, but we'll get into that later in the video. Learn more about writing better offers and paying less for your home with a 1% commission agent at my website, jonsch.com, JONSCH.com. And by the way, if you have any questions watching this video, ask them in the comments. I'll be checking back all year to answer your questions. And if you learn anything, please hit that like button so that this video gets out to more California homebuyers like yourself. So there are 3 stages to buying a home. First is financing. And this comes first because you have to understand your budget before you go out shopping for a home, especially in California markets where a $600,000 condo sits minutes away from a $6 million house. 2025 has introduced new conforming loan limits, which we'll get into county by county. Then we'll talk about house hunting, actually shopping for a home, and how you can do it safely given the new rules imposed by the National Association of Realtors about how agents are required to interact with homebuyers. The new rules are supposedly meant to protect consumers, but they actually make it a lot easier for shady agents to rope you into a contract you can't get out of. And lastly, we'll talk about the purchase process, also called escrow. And the big concern for 2025 is securing homeowners insurance. With 2 new regulations going into effect in 2025, we'll go over best practices for ensuring you don't get screwed over by insurance. Get it? Insuring insurance? It's not very good. All right, first up, financing. Before we get to 2025's new conforming loan limits, here's the TLDR of financing your home purchase in 2025. Unless you have enough money in the bank to buy a home without a loan, you'll need a mortgage, i.e. a home loan, to purchase your home. You can borrow up to 97% of a home's price, but remember, the more you borrow, the more expensive your monthly payment will be. If you borrow more than 80% of a home's price, you'll have an additional monthly fee to pay called mortgage insurance. So to keep your housing costs lower, it's a good idea to have a 20% down payment, though plenty of homebuyers put down 15 or 10% of the price. Who do you borrow the money from? Well, there are 3 kinds of lenders out there. First, you have the major banks, Wells Fargo, Chase, Bank of America, etc. It's definitely worthwhile to call the bank you already have a relationship with and see what their lending programs look like. Second, you have mortgage banks like Guaranteed Rate, Fairway, and Cross Country. These companies write mortgages, then sell them off to investors in huge $100 million buckets. I prefer working with mortgage banks because they have enough scale to offer great rates, but have local agents who are accessible and understand your market. Finally, you have mortgage brokers who act as middlemen between home buyers and mortgage writers. In California, we have big hitters like Cohen Financial Group, Loan Factory, Insignia Mortgage, as well as many smaller players. Brokers tend to offer the most flexibility. So if your big bank can't help you, a broker probably can, but the rates might be a little less compelling. The mortgage rate you get depends on your credit score and the kind of mortgage you're getting. There are different kinds of mortgages, but the big distinction is between conventional mortgages and jumbo mortgages. Without getting into the nitty-gritty details, what separates conventional from jumbo is the amount of money you're borrowing. Conventional mortgages have a loan limit. If you want to borrow more than the limit, you have to go jumbo. Now, fortunately, because California is an expensive place to live, several of our counties have a higher loan limit than the rest of the country. And those loan limits just went up for 2025. So let's review California's conventional loan limits for 2025. Most California counties, these gray ones, have the standard 2025 conventional loan limit of $806,500. Coming in between this and a $1 million limit is Sonoma County at $897,000, Monterey County at $970,600, San Luis Obispo County at $967,150, and Santa Barbara County at $913,100. North of $1 million, but still not at the maximum high balance loan limit, is Napa County with a conventional loan limit of $1,017,750, Santa Cruz County at $1,178,750, Ventura County also at $1,017,750, and San Diego County at $1,077,550. And finally, 9 California counties carry the maximum high balance conventional loan limit of $1,209,750. They are Marin, San Francisco, San Mateo, Contra Costa, Alameda, Santa Clara, San Benito, Los Angeles County, and Orange County. And remember, these are loan limits, not purchase price limits. So if you live in Orange County, have the income to qualify for the loan, and have $200,000 in the bank, you could buy a house that costs up to $1,409,750 with a conventional loan. So know your country's conventional loan limit for 2025 and factor that number into your purchasing plan. If you can stay conventional, you'll be getting a mortgage rate that's about 20 basis points lower than jumbo. And you can even get an FHA loan, which is a kind of conventional loan, to save 90 basis points on your mortgage rate. One other drawback to going jumbo, by the way, is that lenders require a 20% down payment minimum on jumbo loans. So talk to a lender about how much you can borrow, which is based on your income and your existing debt payments, and what mortgage rate you'd get, which is based on the kind of mortgage you're getting and your credit score. Whomever you talk to will need to pull your credit report, which does ding your credit score by 6 or 8 points. But here's the good news. If you approve multiple credit pulls in a 45-day period, the credit bureaus will know you're comparison shopping, and you'll only get dinged once. I recommend calling your bank, calling a mortgage banker or two, and calling a mortgage broker or two. You don't need to decide which lender to go with before you start house hunting, but you do need a pre-approval letter from at least one of them in order to start making offers. Once you have a pre-approval letter, it's time to go shopping for a home. And this is the second phase, house hunting, which is the fun part, until you have to start dealing with agents. Thanks to new rules put into place late in 2024, dealing with agents has become a lot more confusing, requires new paperwork, and puts unsuspecting homebuyers at risk of signing agreements they don't fully understand. So bullet point number 1, feel free to start home shopping before dealing with any agents at all. And here's how. Redfin, Zillow, Realtor.com, NewcomerHomes.com, these platforms allow you to browse all the home listings in California without needing an agent as an intermediary. And these platforms all work pretty much the same way. Set up an account, then you can literally draw the area you want to consider, input your maximum budget, set some parameters around the bedroom and bathroom count you want, and then save the search and turn on notifications. You'll get notified either immediately or through one summary email per day of all the new listings, price drops, and back to markets that fit your criteria. And here's the cadence you'll soon discover. Most homes are listed on Thursdays and have open houses that weekend. By Friday afternoon, you'll be able to review the week's new listings and plan your open house schedule for the weekend. In the winter, there might only be one new listing you want to visit on a given weekend. In the summer, at the height of the home buying season, your weekend might be packed with a half dozen or more open houses to hit. Where things get dicey is if a listing doesn't have open houses scheduled. In this case, you need to schedule a showing, and here's where you have to be careful in 2025. A new rule went into effect late last year that requires a buyer's agent to sign a representation agreement with the prospective home buyer before showing even a single home. So if you see a house you like and ask a buyer's agent to show it to you, you'll have to sign a contract just to see the home. This is the form you're likely going to see, the Property Showing and Representation Agreement, which is horribly misleading. It says here that you, prospective buyer, grants broker the non-exclusive right to represent you in acquiring the properties being shown. And non-exclusive sounds easy breezy, right? If you go see a house with an agent who's a total asshole, well, you're not exclusive to him, so you can work with somebody else if you actually want to offer, right? Wrong. Further down the page, we see that compensation is payable only if there is broker involvement. And broker involvement includes buyer physically entered and was shown the property by broker, or broker showed the property to buyer virtually. In other words, this showing and representation agreement is non-exclusive until the showing happens. Then, as a home buyer, if you do want to purchase that home, you're on the hook to compensate the agent who showed it to you, full stop, period. And the agent you call may even hit you with this, the buyer representation and broker compensation agreement. This agreement can be exclusive, meaning you'll owe that agent a commission no matter what house you buy, no matter who you buy it with. So the point here is, whatever you do, don't click the button on Redfin or Zillow that says request showing or request a tour. You'll get matched with whatever agent paid the most for your info, and before you know it, you'll inadvertently sign a 2.5% commission agreement that you can't get out of. Instead, take the time early in the process to find an agent that you like and actually want to work with. For example, you might like working with me. Thanks to my large network, I represent home buyers everywhere in California, charge just 1% instead of the usual 2.5% commission, and I never use an exclusive representation agreement. Learn more and schedule time to chat at jonsch.com. That's JONSCH.com. Eventually, you'll need to start working with an agent because once you find the house you want, it's time to start the third phase of the home buying process, purchasing. So purchasing a home begins with making an offer, and it's important to emphasize right off the bat that an offer on a home is not a commitment to purchase the home. So what is an offer? An offer has three components: price, terms, and timeline. Price is pretty self-explanatory. It's your offer price for the home. You'll want your agent to reach out to the listing agent to get a sense of the interest in the property. If several offers are expected, you'll probably end up going over the asking price. If nobody's shown any interest, you'd be wise to offer under the asking price. Terms are the financial details of the offer. Terms are like the fine print underneath the price headline. For example, a very important term these days is the buyer's request for the seller to compensate the buyer's agent. You'll hear about this when you start talking to buyer's agents, that their fee will be included in the offer and paid for by the seller. Well, that's not a lie per se. It's definitely some realtor bullshit. Let me show you why. Let's say you want to offer $1 million on a home, and one of the terms of the offer is that the seller compensates your agent, with whom you've already signed a 2.5% commission agreement. Well, that's $25,000 on $1 million home, so really, you're offering $975,000. That's why it's such an advantage to work with a 1% commission agent like myself. If my client made the exact same $1 million offer, they'd actually be offering $990,000, beating out the competition by 15 grand. My client's going to win that bidding war. In fact, my client could offer $985,000 and still just barely beat out the traditional $1 million offer. Learn more about winning the home you want with a stronger offer at my website, jonsch.com, JONSCH.com. And finally, timeline. As a buyer, you propose a timeline for the purchase process, which usually takes about 30 days. Why so long? Well, it's mostly because of the loan you're taking to buy the house. Mortgage underwriting is extremely thorough and pretty fucking slow. So most of the timeline will be dictated by your lender. You or your agent will want to touch base with your lender before you write any offers to ask how long it will take them to appraise the property, complete their underwriting, and close escrow. The part of the timeline within your control is the inspection period. This is the time that you have to inspect the property in any way you want: general inspection, termite inspection, sewer line inspection, roofer to check out the roof, foundation contractor to check out the foundation, mold test, anything, and confirm that you want to buy the property. If you don't, you can use your inspection contingency to cancel the contract. In most California markets, it's customary to allow 10 days for the inspection period, though that can be shortened to 7 or even 5 days in a competitive situation. And there's one inspection period contingency that carries extra weight in 2025, and that's the insurance contingency right here on the contract. 2 or 3 years ago, this separate contingency didn't even exist. In 2023 and 2024, when insurers like State Farm and Allstate bailed on California, this contingency actually became important. And 2 new California regulations taking effect in 2025 might make it even more difficult to secure homeowners insurance for most Californians. The first new regulation allows insurers to use forward-looking computer catastrophe models to set rates. That's a fancy way of saying that insurers can now factor in climate change when setting insurance rates. In exchange, the state received a new commitment from insurance companies to sell more insurance, which is great. And California Insurance Commissioner Ricardo Lara expects to see insurers returning to California in mid to late 2025. More insurers means more competition, which should push prices down and make insurance more available. But if insurers are allowed to consider climate change when setting prices, well, that seems like it will just push prices up, right? Another potential price driver is the state's second new regulation, which requires California insurers to increase their percentage of policies in high-risk wildfire areas by 5% every 2 years. That's great for homeowners in wildfire-prone areas, but for the rest of us, it'll probably drive up prices. Fortunately, some are saying that the regulation doesn't require these new policies to be written fast enough, so it may be years before we feel the fiscal impacts. Either way, when you get an offer accepted in 2025, one of your first orders of business should be getting several homeowners insurance quotes. You want to make sure that A, the home is insurable, and B, that the cost of insurance is manageable. And as soon as you find an insurance quote that you like, you send it to your lender ASAP so that they can approve it too. Lenders require homeowners insurance, and they have to improve the insurance you select. You should aim to get this done in the first week of escrow. Once you have removed this and your other contingencies, once your lender has approved the loan, and once the seller has completed the handful of tasks that they are responsible for, the seller gets paid, the new deed gets recorded, and you get the keys to your new home. Subscribe for more California real estate news and market updates.